Hey guys, it's Adrian. It is the end of the week, so here we are, Friday afternoon. It was a great week of trading. This was a good one. So the volatility bands have really been sort of the mainstay this week. We've had some XRVs that are doing pretty good too. The opening gaps, those have been slow, so lots of back and forth on those, kind of flattish on the week, but still up. And all in all, it's been just a great week of trading, and I think, again, I want to reiterate the importance of you need to know your tools. You need to have a game plan. You need to know your workflow. Get that workflow just, perfectly oriented and perfectly laid out so that you know exactly what you're going to do, exactly when you're going to do it, exactly why you're going to do it, and then just let the market take care of the rest. All right, with that said, today's been another great day in those index trades. Divergence across the board. So Qs have been down. The rest of it's been kind of up and flat and up and flat. But let's take a look at the charts and see what the game plan was up until now and what it's going to be going forward into the afternoon. So here you have it. NASDAQ continues its stretch in the penalty box. So what's happening today is another nice orderly sell-off if you're on the short side. I don't know if you're long or if you're looking at your 401k or something. It doesn't seem so nice. But what we're doing here is trading the markets. And the most important thing for us is predictability. The biggest predictive force in my trading today has come from this move right here. So that move to the downside is what I generated these fib levels from. We also have all those blue lines that represent the support and resistance zones, and the orange lines that represent the volume weighted average price that is anchored to each one of the swing moves. So if you're looking at the VWAP, somebody said yesterday they don't quite understand what I'm doing with these. This move to here is this VWAP. This move to here is this VWAP. And this move up to here is this VWAP. Those are called anchored VWAPs, and the reason they're called anchored is they're anchored to those moves. So the big thing that we've taken away from the week, and we take away again from today, is that when you see confluence, when you see spots where the VWAPs overlap with things that are going on in the market, right? When you see that volume by price data over here, and you see the anchored VWAPs, and you see support and resistance and everything lining up, that tells you that you got a good opportunity to go and trade in the direction of the dominant trend. And the dominant trend, again, is down. You don't want to go against that. A lot of people try to pick bottoms. A lot of people try to think, I'm going to be smarter than the market, going to outsmart it. I'm going to pick this bottom exactly. In hindsight, that's easy to see. What if you thought earlier that this was going to be the bottom on the day? Then what happened to you is, you wound up down here. So always just follow the trend, see what the market's telling you to do, and then look at your layers of analysis to figure out what to do. When do you go and find a pattern entry? Those of you who are fans of Around the Horn, what you know is this up here was an infield fly setup. And what we did here was we shorted the market right at what was also a Fibonacci retracement. You can see there that 299.94 was a make or break level for the fib retracement. 618 usually where I start looking to see, is there going to be a trend change? Are we going to continue higher and move up into here? The clue that told you, the market tell here, if you will, if you're a poker player, was that infield fly formed on the heels of this. And if you read Around the Horn, then you know that it's an exhaustion move. It's an extension exhaustion is what an infield fly is. For those of you in the rest of the world who are following this stuff, you know it as either World Cup trading or my book, Beat the Street. Either one of those, what you're looking for is an exhaustion pattern on the heels of a big move higher. Once we had that infield fly set up in place, this was an easy one to pick off. So the theory here is we're into the 618 retracement. We're into this level of support and resistance right up here at the line. And once we break that low, it's not really a picture-perfect infield fly. It would have had to close completely down in the bottom of the bars range, but that's close enough on a 5-minute chart when they're both tight like that into the bottom. What that told us is that we had a good opportunity for a move back down to this 299.14 level, or maybe even down into 298.93 or down to this green pivot line. All depends on how you structure the trade. If you're taking larger positions, then you can scale out. I don't really advise scaling in on something like this. If you're in, you're in. This level up in here again represents sort of the go line. And then as you're moving down, you can make the choices about, do you take off a piece of a position here? Say you have 1,000 shares for the sake of argument, right? Are you going to take off $700 right at that point? Or are you going to take off $350 and look for the additional extension down here into the 298.25 pivot line to book some additional profits? These are all good problems to have, and if you're following along and you follow my work, then you know why you're doing it, and most importantly, you are able to profit from it. Rest of the day, my strategy is going to be the same. I am going to be watching the lines inside the box here. And when we get moves back up into these areas, I will assume that we have not had a trend violation. I will assume that we have got another opportunity to go lower. If it gets into the higher part of the range, up in here, or up in here even, I'm going to look for that infield fly pattern before I look to see if we can get a repeat of this move to the downside. But generally speaking, I think today's trading is pretty straightforward, and if you're just following along and you're following the logic behind all these things, you should have a pretty easy time setting these up. If you haven't done it already and you're thinking about doing it, give Joe Dan a call and let's see about getting you to Las Vegas on April 23rd for Super Vol Sunday. So that's going to be a great event. We are going to go through how to do, these trades on the spiders, diamonds, Qs. Oh my, right? Those are great trades. Everybody likes them. The futures equivalents of these things. So if you're looking at the NU, you're looking at the ES. Same kind of principle is going to be at work there. And actually, you can use the indices, or you can use the Qs or the diamonds or the spiders or whatever to trigger your trades in those futures contracts. All of it's going to be great. We're right in front of the Traders Expo. Julie and I will be there Monday, Tuesday, and Wednesday as featured speakers. And you can come see us there as well. It's like a great 2-for-1 plus. We'd love to see as many of you as we can in Las Vegas. So we're almost sold out as far as seating at the event goes. There will be a live stream of it as well. So if you want to just do the live stream, if you can't make it to Vegas, let Joe Dan know and he'll take care of you. And otherwise, I want everybody to just pat yourself on the back. This was a really good trading week. Look at the things that were positives. Make that your takeaway for the session. Make that your takeaway for the week. And I'll see everybody right here next Tuesday.